Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since the Australian dollar corrected itself from 64 cents from that long candle we can see here, the market it posted an engulfing candle, moved through the 60-day simple moving average, and is now heading on towards the top side target around 65.5, and with a possibility of seeing 66 cents reached, which was back in July. Overall though, the market is somewhat bullish, as we can see here from the technicals, and is in a prime position to rally on, with any pullback likely to be shallow around 65.15. Looking in the economic calendar for this week, China released its manufacturing PMI, which came in pretty much on target at 49.4 and non-manufacturing around 50.3. Looking into this week, all eyes will be on the non-farm payrolls, but before that we've got the Australian GDP on Wednesday and also the RBA Governor Michelle Bullock to speak, and then later we have the US ISM manufacturing, the US JOLT, the US ADP, and then on Friday we have the non-farm payrolls with an expected forecast of 74,000 jobs added, with the previous at 73. The unemployment rate is looking to nudge up from 4.2% to 4.3. No doubt with a weaker number could stir up much in terms of the rate cut expected this month from the Fed, and also keep an eye on the US dollar as it may tumble further, as it currently sits around 97.70. Turning to the euro, the market is somewhat strong, and as we can see here from the weak hammer that was posted, all eyes will be on the top side target, which I still feel is achievable at 117.15 to 118, where we saw these highs back in July and in June. Any pullback is likely to be shallow, but still keep an eye on this base. It is a little bit high now, and it comes in around 115.65.75. The dollar yen is still weaker, and I still feel from the current engulfing candle that the market is likely to move lower, and that is down towards the region of 146.70 as minor, and then lower down to 146.25, and the target still remaining at 145. In light of how the market's trending, well, we do have an ADX to a bear case. The MACD is married up to the RSI to support a negative case, so therefore we should see further weakness into the start of this week. Looking at sterling, well, the market was a little bit whipsaw, but ended up posting a hammer to the weak side. But nevertheless, I still feel the pathway is still to the upway, and therefore looking towards 135.20.30. A bit hesitant towards that level, as we can see, but nevertheless, a break there should give a further rally on to 136, and still keeping an eye on the level around 137. Looking at gold, well, the market is just powering at the moment, and as we can see now reaches its objective of 3,435, and we now see exceeds its objective of 3,435, and looking up now towards 3,450 to maybe on to the all-time high, which is around 3,500. A very strong trend in place, and the MACD is married up to the RSI. That's a little bit overbought. Nevertheless, there's very strong powering pattern here. Two engulfing candles, a hammer, and therefore should see the rally on. Any pullback likely to be limited. Turning to oil, a little bit weaker, but this rounding bottom still supports a bullish case. We haven't fully broken down as the RSI is at the midway point, and therefore could see further gains into this week. Maybe looking further to $64 to $65. With any pullback likely to be shallow. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new week.